welcome to this video on Business and Entrepreneurship Education Grade 8. Today, we'll look at Unit 7, which is on Business Cost, Revenues and Profits Part 2. The learning objectives of this unit are to calculate unit cost, explain ways to determine the selling price of a product, define and calculate revenue and profits, define the term break-even, and identify the break-even point. What is unit cost? It is the cost of producing 1 unit of output. It is also known as average cost. The unit cost of a product decreases as more output is produced. How to calculate unit cost? Unit cost is equal to total cost divided by output. Let us see an example of how to calculate unit cost. The table below shows the total cost of producing boxes of matches. Calculate unit cost. When output is 10, total cost is 4,000. When output is 50, total cost is 5,000. When output is 1,000 boxes, total cost is 10,000 rupees. And when output is 10,000 boxes, total cost is 80,000 rupees. Let us see how we have calculated unit cost. For 10 boxes of matches, the unit cost is 4,000 divided by 10 is equal to 400 rupees. For 50 boxes of matches, the unit cost is 5,000 divided by 50 is equal to 100 rupees. When output is 1,000 boxes, unit cost is 10,000 divided by 1,000 is equal to 10 rupees. And when output is 10,000 boxes, unit cost is 80,000 divided by 10,000 is equal to 8 rupees. As you can see, the unit cost has decreased as output increases. That is, when output is 10 boxes of matches, the unit cost is 400 rupees. Whereas, when output is 10,000 boxes of matches, the unit cost is 8 rupees. How an enterprise will determine the selling price of goods? Selling price is determined at the price at which a product or service is sold by the seller to the buyer. Prices are often set above the unit cost so as to generate profit. The most common way of determining selling price of a product is cost plus pricing. What is cost plus pricing? It refers to setting a price by adding a percentage profit to the unit cost. Here is an example. Millie has produced a new brand of chocolate and now she has to decide about prices to sell the chocolates. She decides to add 50% to the unit cost to set the selling price. The following information about Millie's business is as follows. Total output is 10,000 units. Variable cost per unit is 55 rupees. And monthly fixed cost is 50,000 rupees. Using the information provided above, let's calculate unit cost and selling price. Steps to calculate unit cost. First of all, we have to look for the fixed cost. Then, we have to calculate total variable cost, which is variable cost per unit multiplied by total output. Then, we have to calculate total cost, which is fixed cost plus variable cost. And lastly, we will have the unit cost when we divide total cost by output. The answer is fixed cost is 50,000 rupees. Total variable cost is equal to 55 multiplied by 10,000 is equal to 550,000 rupees. Total cost is equal to 50,000 rupees plus 550,000 is equal to 600,000 rupees. Hence, we get a unit cost of 600,000 rupees divided by 10,000 is equal to 60 rupees. Now, let us see the steps to calculate selling price. Selling price is equal to unit cost plus 50% profit on unit cost. The selling price for chocolates is 60 plus 50 divided by 100 multiplied by 60 is equal to 60 plus 30 is equal to 90 rupees. What is revenue? Revenue is the amount of money that a company receives from the sale of goods. It is also known as sales turnover. The aim of any business is to maximize sales so as to earn more profits. This can be achieved in two ways. Firstly, by increasing the quantity of output sold, and secondly, by increasing the price of products. The formula to calculate total revenue. Total revenue is equal to quantity sold multiplied by selling price. Here is an example of how to calculate total revenue. The table below shows the quantity of units sold and the selling price, which is 70 rupees. When number of units sold is 0, total revenue is 0. When units sold is 100, total revenue is 7,000. When number of units sold is 200 units, total revenue is 14,000 rupees. Now, let us see how to calculate A, B, C, D, E, and F. So, A is calculated when 300 multiplied by 70, which gives 21,000 rupees. C is calculated when 400 multiplied by 70, which gives 28,000 rupees. And E is calculated when 500 multiplied by 70 is equal to 35,000 rupees. Now, let us see what is profit and loss. Profit is when the total revenue exceeds total cost. Remember, profit is a gain. Loss It occurs when total cost exceeds total revenue. And remember, loss is a deficit. Profit or loss is calculated as follows. Profit and loss is equal to total revenue minus total cost. This is an example where we have calculated profit and loss. The table below shows situations where a business earns profit or loss. When 300 output is sold, we have a loss of 3,000 rupees. When 600 output is sold, we have a profit of 4,000. Note, loss figure is usually indicated between brackets. For the above example, at 300 units, there is a loss of 3,000 rupees. This is because total cost exceeds total revenue. Loss figures are indicated in brackets. Whereas, at 600 units, there is a profit of 4,000 rupees. This is because total revenue exceeds total cost. What is break-even? Break-even is a situation where total revenue equals total cost. Therefore, there is neither profit nor loss. How to calculate the break-even point? Break-even is equal to total revenue is equal to total cost. Why businesses have to calculate break-even? As break-even point shows neither profit nor loss, hence this indicates the minimum level of output to be produced to avoid losses. All businesses must aim to produce output levels that generate profits. Here is an example of how to calculate break-even point. The cost structure of a clothing business is as follows. Fixed cost is 6,000 rupees. Variable cost per unit is 30 rupees. And selling price is 60 rupees. Calculate the break-even point. Note, the clothing business should aim at producing an output level above 200 to make profits. The table shows how to calculate break-even. When 100 output is sold, there is a loss of 3,000 rupees. When 200 units are sold, there is neither profit nor loss. That is, there is break-even. And when 300 units are sold, there is a profit of 3,000 rupees. We can see that at 100 units, there is a loss of 3,000 rupees. At 200 units, there is break-even. At 300 units, there is a profit of 3,000 rupees. Some formulae for you to remember. Unit cost is equal to total cost divided by output. Selling price is equal to unit cost plus percentage of profit. Total revenue is equal to quantity sold multiplied by selling price. Profit or loss is equal to total revenue minus total cost. And break-even is equal to Total revenue is equal to total cost. Here are some additional links that you can refer to. Well, students, we have reached the end of this video. Hope you have enjoyed it. Until the next, goodbye.